All right, so fun day, David.
Yeah.
We had a lot of fun.
This is great.
You saw a lot of units.
Oh, it's fantastic. I mean, the attention to detail is great. And like we were talking about, finding opportunities that are like, I mean, 4-bedroom, 4-bath, efficiently laid out, and then at that price point that they're at with the projected numbers. I mean, it's pretty impressive.
It all really does come together, but one of the more unique things about this building, and Aaron, you can speak to this, is that it's mostly 4 bedrooms.
Right.
Why did the tiny group decide to go that direction?
Well, the biggest issue with Airbnbs in town is that they don't outperform hotels. The benchmark is 4 bedrooms. So once you have 4-bedroom, 4-baths, you get more guests, you get more return on your investment, you get higher nightly rates. The other issue that a lot of the STRs in town have is they don't have amenities. So we built this to be an STR building. So there's a pool, a wellness room, a workout room, an elevator, a rooftop deck with jacuzzis and a sauna, a golf simulator, and a garage. So
That's it?
That's it.
Yeah, it's really impressive.
What are we going to do here? Yeah.
Well, okay, so rooftop deck. That's something you haven't seen yet. That'll
I'm excited to see it.
I'm excited for you to see it too, because in Nashville, being a native Nashvilleian myself, we grew up talking about being in the cereal bowl that is, Davidson County. And when you get up there and you look around, you really can see the hills that surround the outside of the county. It's beautiful.
Yeah. So you get a little bit of everything. You get the hills, you get the cityscape, you get downtown, you can see a little bit of Vandy, you get to see everything up there.
Something I want to touch base on is, because this is an income producing property,
Right.
the words bonus depreciation have been getting thrown around a lot, especially in the media. It's a new thing we can do. Talk to us a little bit about bonus depreciation and why it's not the end all be all and why you should buy something, but it is an extra benefit that an investor can capture.
Yeah, that's a great way of describing it. I mean, with, a typical place, you go and buy a investment property, people are used to depreciating it over X amount of years, 20, 30 years, whatever. But now with bonus depreciation and things like cost segregation, these are ways that you can fast forward some of that depreciation. So on a property like this, where you can get, 6-figure income on, the more of that you can offset earlier on with bonus depreciation, you can lower that income and sometimes even recognize a loss. And then if you're an investor where you do this often, you hold the property for 3-5 years and you want to 1031 it into another investment, you could kind of keep rolling that depreciation on and, for a long time. But like you said, I tell clients, don't let the tax tail wag the investment dog.
Wait, say that one more time.
I'm a big dog lover.
I love that. No, but it makes...
Don't let the tax tail wag the investment dog. Meaning, we want to be strategic with taxes. I am also a CPA, and I tell clients, absolutely want to save taxes where we can, but we don't want to run and buy a property because we read on Instagram, there's this thing called bonus depreciation. Yes. But what you don't want to do is also ignore that, because it is a real benefit. If you can utilize that, increase the cash flow, the cash on cash return in a property by doing that, it's a great thing to look at. And it can free up cash to put into other properties and kind of continue to do that. So,
Aaron, tell us a little bit more about the Tiny Group, where it started, how long Ed has been building these magnificent developments, where you started and kind of what you're doing today.
So my grandfather started building in 1950, so it's been a minute. So my dad's been building for 50 years, and mostly in Chicago. He built 1,000,000-square-foot high-rises, but also multifamily. So he's been building high-quality condos and multifamily buildings for 50 years.
So you're a third generation.
I'm a third-generation builder, so I do mostly single-family homes under the tutelage of Ed. But I do learn a lot.
You keep him in line.
I do keep
That's
him
what
in
it
line.
is.
I do keep him in line. Exactly.
Well, he builds a good product, and we had the privilege of selling one in East Nashville.
Okay.
The Avery. It was a big success. And now we're coming on this side of the river.
Yeah.
And tackling Charlotte Avenue. And I'm honored to be a part of the process as well. And I can definitely speak to the quality build. Not only do they build a high quality product, but they practically live on site 7 days a week.
Yeah.
Absolutely. We've got a lovely trailer.
Speaking of Ed loves a good return.
Yes.
And he doesn't do this for fun. He's got a big heart, and he's building a product that we're trying to sell that we truly believe will perform. But talk to us about what it looks like from an investment standpoint and why you're so excited about this.
Well, again, we built this building to be an STR building, so we built it to perform. And based upon Avance and a couple other local STR management companies, they're projected to make around $140,000 to $160,000
Gross revenue.
gross revenue.
per
What does
unit.
that look like per night?
So we did a conservative 70% occupancy rate. So we did a blended model, so it's about $650 a night. But units can around like when we're in can rent for over $1,000 a night.
And listen, you've got hockey games, football games, CMA Fest, awards shows, you've got theater with TPAC. You could easily bump up the nightly rate. If I was to bring David and one of his clients here and say they want the penthouse, how would you be able to kind of show them what the year would look like in regards to, we want to be here for 4 months and then we want to rent it out the rest of the year? Is it really that simple?
It is
to
that
do?
simple. You can do whatever you would like with this
And
building.
you don't have, well, what about permits?
So permits, you get a permit every year. It's renewed, and we would help you take care of that.
And so if David's client is coming into town and wants his fridge stocked, something.
Oh, my fridge stocked.
Yeah, I know my fridge stocked. I'm about to go stock my fridge.
Partners that do all of that. This could be turnkey for anybody that wants to come in. It could be if you're a guest and you want to rent it out, you can do the same thing.
The most interesting part of it is just the fact that they're 4 bedrooms. And then the entry point, I was surprised at the price getting in a good way, thinking like, wow, the numbers, the projected return, you're not having to spend, $2 or $3 million to get into a unit like this. So
Exactly.
That's the numbers could look like they could work.
And one of the things that Ed does too is he always provides more than you would think for a price point too. He always goes the extra mile. Solid doors, all quartz countertops, all those things are things that he expects to be seen in his places.
Yeah, and when I'm dealing with wealthier and wealthier clients, a big thing that comes up is David, we don't want to have all of our money in the stock market, but we also don't want to have all of it tied up in real estate if there's a 2008 or just because real estate can be illiquid, right? You want to be a long-term holder. And so I'm always looking for what are diversified streams of passive income.
Mm-hmm.
So, maybe somebody they're still working, they have X amount of income coming in, but starting in their 20s, 30s, 40s, 50s, they're thinking about the long game of ultimately, I want to have some money coming in from the stock market, from my dividends and that sort of thing. I'd love to have some passive income coming in from real estate. Mm-hmm. And then in real estate, you could break up that bucket into short-term, maybe some long-term rentals, different streams of income there. And then eventually somebody has Social Security and government-backed income. Right. But getting those diversified streams of income, starting young, beginning with the end in mind, so that you acquire while the numbers make sense in Nashville. And then obviously, as everybody knows, on real estate, it's not just the income. You hope you hold it long enough. The appreciation is going to be meaningful, and maybe you've deferred a lot of this. Accumulated a lot of bonus depreciation and done a cost segregation study and really, maximize some of the tax benefits on the front end.
Yeah.
Well, another thing to consider, and it's something that we love educating our clients on the most, is when you do have an asset that performs and bringing in income, if you need money, you can go borrow against that asset because it's performing. It's bringing in income on a monthly basis. So if you need to go cash out some money and you put that in your checking account, that money is not income. It's debt. So you can't get taxed on it. So you can use that money to your advantage, whether you need to go buy something for the family or for school, or you want to buy another investment and then do the velocity of money theory. Yeah. There's lots of great benefits to owning an income producing property and, really being able to choose if you want it to be income producing or not. Maybe you want to live here full time.
Right.
Maybe life changes.
You just want some income to offset the carrying costs, but you don't need it to be a home run investment. It's a hybrid use kind of investment.
We have clients that even if it's a zero-sum game, over the long haul, they're looking at appreciation and living here for 6 months and then moving out for 6 months, going to travel while the guests help pay for the mortgage. And
I talk to clients all the time for that, or if it's a second home, or maybe they do business here, like you said, some of the time. And they're like, okay, well, I'll put $1 million and I make it a zero-sum game. I'm here 6 months, pays for itself, but then in 5 years, maybe I walk away and sell it for 1.5 and make a return on my capital and that sort of thing. And then you mentioned using it potentially
Yep.
to take some money out. Clients, high net worth clients will do that on their investments too. They'll have an investment brokerage account and they can take a loan against that. Same kind of concept where they're living on that and not having to sell their investments and pay capital gains tax on stocks, or not having to sell this place to get income, but just taking debt out against it potentially. Gives you just a lot of different levers to pull during different economic climates, right?
Right.
Having a little bit of money everywhere.
And that's why we need somebody like David in our life.
That's right. Well, I was actually,
where I was.
I was just about to say, it's nice when you have a realtor in your corner you can trust, and a builder that you can trust, and a developer that you can trust, and a financial advisor that you can trust, giving you not the advice you want to hear, but the advice you need.
Exactly.
Being
It's
their
somebody that
advisor.
looks outside of their just niche. Like
Yeah.
you don't want your wealth advisor only saying you got to put all your money in stocks because that's how we get paid. It's say, no, let's talk about your overall goals, the overall balance sheet. How much cash do we have? How much should we have in stocks? How much in bonds? How much in real estate? How much in use real estate versus investment real estate? And kind of going through that. And then saying, okay, then selfishly, we'll manage this. This is how we get paid. Or Franklin being able to say like, hey, but looking out for the client first.
Yeah.
Hey, you need to, as much as I'd love to sell your $5 million home, maybe right now it makes sense that you keep it, and we'll stay in touch, and then I'll advise you to do something in a couple of years. That's just a good advice from.
Absolutely. I mean, Aaron will attest. Like it's very refreshing to see the look on people's faces when you give them the right advice.
Right.
And I wish that was the case just all the way around.
Sure.
But when you do get the right people together, not the best, doesn't have to be the best. It's the right people. You get the right people with the right amount of trust and the right amount of performance. You can really get anything accomplished. I truly believe this building is first class, top tier. And I'm really happy that you were able to come and see it today.
Oh yeah, thanks for
Yeah,
having
you're
me.
so welcome.
I'm excited. Congratulations on a great product. I'm excited to see the success it's going to have, and then also to potentially be a part of it in different ways. And you guys always do a great job in
Thank you.
promoting Nashville and the right kind of real estate. So
It's a great
you've got,
city.
good people like this helping the cause too.
Yeah.
So